Hello everyone, Karthik this side. Hope you are doing good and are healthy. Today we are going to go forward and just get introduced to stock market, learn about what are the key terms which are generally being used in stock market, and we'll also learn about what are the different type of stocks which are available in stock market. And
Hi everyone. So in this video, we're going to be getting introduced to the stock market, in which we'll first learn what actually stock market is, then how does it actually work, and why people generally go forward and invest in stock market. So first, what is actually a stock market? So we can say the stock market, or also known as equity market, is a platform where buyers and sellers trade shares of publicly owned companies. These shares generally represent ownership in that company, and when you go forward buy a stock, that means you are essentially buying a piece of that particular company. Okay, how does it actually work? Is let's take an example of primary market. So primary market is where company first sell their shares to the public. This is typically done through initial public offering, and some popular examples of IPOs are such as Ola Electric or Bajaj Housing Finance and so on. In secondary market, we can say this is where investors buy and sell existing shares from other investors, and this is where most action happens. Uh, and last part, why do people go forward and they invest in stock market? Why can be a good investment option for you? So first, potential for high returns. Historically, what we have seen is the stock market has outperformed other investment options such as savings or fixed deposits uh, and so on. Second is diversification. In stock markets, we go forward and we can go forward and we can buy stocks of different sectors or different industries. Uh, and what happens is if so that if one sector goes down or if one sector is not performing well, then other sectors compensate for that. So because of this diversification, your downside is protected. Whereas if you go forward and if you purchase stocks in only one sector, and if that sector is not performing well, then your investment will not grow. And sometimes it might happen that your investment will turn negative as well. So diversification, that's why diversification is very important while going forward and investing in stocks. Then next is ownership. Buying stocks gives you a stake in the companies that you invest in. So that is again a reason why people go forward. They generally invest in stock market. Next is liquidity. In stock markets, if you need money immediately for any financial crisis, or if you want your money, then you can go forward and you can get your money in your savings account in 2 or 3 days. If it's not Saturday, right? Because Saturday and Sunday, stock markets are closed. Whereas in case of properties, it becomes very difficult to sell those property and uh, get that money to a savings account in 2 or 3 days. Next to impossible, right? So because stock markets provide a good liquidity, it can be a great option for you. Next is income. We can get passive income as well in stock market. How? In the form of dividends. So what are dividends generally? Is we can say, let's take an example of company A and company B. So in company A, let's say company is making profits, but it is reinvesting that profit to grow further. And company B, whereas is paying its shareholders part of that profit just to let's say compensate them, or let's just to reward them for being a shareholder in their company. So this part of the profit that company B is paying for towards its shareholder is nothing but dividend. Okay. Now that we have learned what stock market is, let's go forward and see what are the key terms which are generally being used in stock market. First is stock. So we can say a stock is a unit of ownership in a company. Think like a piece of pie. When you go forward and buy a stock, you are actually buying a piece of that particular company. Share is alternate word for stock. Generally, people go forward and either people use stock word or they either use share word. Let's say, for example, I'm going forward and buying 100 shares or 100 stocks in a company. Uh, Next is equity. So equity is nothing but the total value of a company assets minus its liabilities. It's, in simpler terms, we can say it's the net worth of that particular company. IPO, full form IPO is initial public offering, and IPO is when a private company offers its shares to the public for the first time. This is how a company becomes generally publicly traded. Uh, Next is secondary market. Secondary market is generally where investors buy and sell existing shares from other investors. It is like it is like a used car market, but for stocks. We can say. The dividend. A dividend is a generally payment method by a company to its shareholder, and we have discussed about dividend in previous section as well. It is like a reward for owning a piece of the particular company. Next is capital gains. Capital gains are the profit that you make when you sell a stock for more than you paid for it. For example, I have purchased a stock in 100 rupees and I have sold that stock with 20% profit at 120 rupees. So my capital gain is nothing but 20 rupees. So capital gain, we can also say, is the profit that you are making by purchasing and selling shares. Next is bull and bear market. So we can say a bull market where prices are generally rising. It's like a bull charging forward, whereas in bear market prices are generally falling. It's like a bear going downhill. Let's say, for example, we can say Nifty yesterday was at 20,000 and today Nifty is at 19,900. That means Nifty have dipped. So this is just an example. Okay, that means Nifty has dipped. So we cannot say that's a bear market, but obviously Nifty has it. So we can say we are seeing a downtrend or it's a bear market. It was a bear market yesterday. And today or in this week, let's say, for example, market goes 5 or 10% up, which doesn't happen in 1 week. But let's assume like that market have rallied 5 or 10%. That means we are currently in a bull run. Now let's go forward and deep dive into the type of uh, different type of stocks. First is common stock. We can define common stock as these are most common type of stock, and holders of common stocks have voting rights in the company and they can benefit from potential capital gains. Example of this could be if you go forward and buy shares of Reliance Industries, you are buying common stock, you will have voting rights at the company's annual general meeting, and you can potentially profit if the stock price rises. Next is preferred stock. Uh, we can define preferred stock as a type of stock that offers preference over common stock in terms of dividend payments and asset distribution in case of liquidation. However, preferred stock holders typically do not have voting rights. Example of this could be a company like SDFC Bank, which let's say issues preferred stock, and holders of this preferred stock would receive dividends before holders of common stock, but they would not have voting rights at the company's meetings. Next is growth stocks. We can define growth stocks as stocks of companies that are expected to grow at a faster rate than the overall market. These companies often reinvest their profits to fuel growth rather than paying dividends. What dividend is we'll discuss that in the separate video. Example of growth stocks could be TCS or Infosys, which are often considered as growth stocks due to their strong growth potential in the Indian IT sector. Next is value stocks. We can define value stocks as stocks of companies that are believed to be undervalued relative to their intrinsic value. These stocks often have lower P ratios and may be overlooked by the market. So whatever terms that I have just covered, P ratio or intrinsic value, we'll discuss that in the separate video, of course. Example of value stocks could be, let's say, Tata Motors, which might be considered a value stock uh, because its stock price is perceived to be lower than its underlying assets and earning potential. As in, I'm going forward. So this is my perception. Let's say, for example, I'm going forward and buying Tata Motors because I think EV industry and auto industry is gonna be good for next 3 to 4 years. That's why I see Tata Motors or Tata Motors or any other company as value stocks. So this is when we go forward and we say this stock is value stock or something. Okay. Uh, Next is blue chip stocks. Definition of blue chip stock could be stocks of well-established, large and financially sound companies with a history of consistent performance. These companies are often considered relatively safe investment for investors. And example of this could be Reliance Industries, HDFC Bank, and Infosys. Then last is penny stocks. We can define penny stocks as stocks of very small companies that trade at a low price per share. It could be 1 or 2 rupees per share as well. These stocks are generally highly volatile and they can carry significant risk. Example of this could be there are many penny stocks to be honest listed on the Indian stock exchange, but they can be difficult to research and often have limited liquidity as well. And in many of time, these penny stocks are traded in certain time frame only in the market. Or for example, it could be 10 to 10:30, or it could be 1 hour time frame such as 10 to 11, and so on. Hope now all are clear about what is the stock market, what are the key terms and type of stocks. I'll see you in the next one. If you like my video, please go forward and hit that like button. Thanks a lot.